Okay. Well, we're just after the top of the hour, so we'll go on ahead and get started. Thanks everybody for joining. I'm What's It Eats or Kyle, here with another Rook community call today. We've got an extra special one and one I've been looking forward to for a while. So with us is a handful of folks from the Tokamak team. We've got CJ, Bruno, and Craig up here with us. Guys, how you doing?
Doing great, thank
Great,
you.
Kyle. Thanks. We've been looking
Oh,
forward to this as well.
right. It's something that, I know we had our call last week about spinning up the reactor, and we'll get to that in due time today. But I really wanted to just kind of start this off, making sure that you guys got a chance to introduce yourselves, and then we'll dive into Tokamak and how you guys go. So why don't we start, CJ? Why don't you let us know what you're doing at Tokamak, and then we'll just kind of go down the line.
Yeah, gladly. So I joined up last September primarily to assist with partnerships, DAO-to-DAO facing activities. I stay pretty busy over here. We're fortunately in high demand from DAOs wanting to use our liquidity services and such.
Awesome. Bruno?
Hey, so yeah, my name is Bruno. I have this a little bit clumsy screen handle that I late to change it. So I, like many on the core team, I wear like many hats as usual in crypto, but I would say that I'm mostly focused on strategy and tokenomics along with other people on the team. Yeah, that's pretty much it.
And Craig?
Great. So I'm Craig. I was on the founding team of Tokamak that was spun out of a centralized market maker, centralized meaning a centralized company. We were focused on DeFi, and today, along with everybody else on this call, wearing a lot of hats, kind of broadly bucket a lot of my focus on product and growth.
Awesome. Well, I think that's an interesting place for us to kick off right there then. So, you said that Tokamak was spun out of a centralized market maker. Tell us a little bit about when and how you guys got started, and that's led to today.
Yeah, absolutely. So let's see. I had met Carson. Carson, for everybody here, I think probably knows, but is Tokemak's founder and was the founder of this centralized market making company called Fractal. Almost day one, when crypto became my day job, I was working for a liquidity aggregator at the time called Total, very similar to 1inch, and he was starting Fractal, and we kept in touch over a while, a couple years, and I ended up joining Fractal at a time where they were going through an interesting growth phase. So Fractal at the time was trading digital assets on-chain and off-chain, kind of as a proprietary trading shop. But where we had really started to get traction was working with, in conversations with both decentralized exchanges and with protocols themselves who had tokens, who were really struggling with creating liquidity for those assets. And DeFi looked very differently at this time. And so what we ended up doing and scaling pretty well was trying to work with these groups and help them establish a baseline of liquidity in the markets, on which more organic liquidity and depth could continue to build. And one of the things that we tried to do in this process was align incentives much better than they typically or historically have been between market makers, really, and anybody who they're working with. Working with market making firms is usually expensive. It's a black box. It takes quite a bit of negotiation and formal arrangements to spin these things up. And in the end, the market makers really have all the control. And as Fractal, we wanted to change that model and align incentives and provide much greater transparency along the way to support people who really needed liquidity. And by helping them, we were part of the tide that was rising to lift all boats. And kind of over the course of that process, we had the idea that, we're still constrained by being a centralized entity in this process, trying to help decentralized protocols. Is there a way in which we can provide the same kind of service or even a better service and decentralize ourselves? And that was really the kind of inspiration for Tokamak, is to move everything on chain and align incentives in a way where everybody can participate, remove the friction, remove the costs, remove the overhead and complexity of creating liquidity, and put it in the power in the hands of the people who it helps.
That's awesome. So, you talk about decentralization. Tell me about some more of those kind of key elements that you guys have built into Tokamak that that allow that decentralized element to really take shape.
Yeah, that's a good question. So I think that the easiest mental model here for Tokamak, being a decentralized market maker, is to look at what the core components of a centralized market maker consist of. And this is definitely an oversimplification, but the roles within a market maker are: one, they are a capital provider, they have capital. Two, they make strategic decisions about where to create liquidity and where they think deploying liquidity and trading can be effective. And three, they need to know how to price these markets. And so we have a role within Tokamak that effectively replicates each one of those functions. The simplest is the liquidity provider. They're the capital provider in the system. And I think one of the beauties of Tokamak, one of the pieces that's elegant that I'm always really excited about, is that we enable any participant to just kind of act as one or all or many of these different kinds of roles in the system. So the first, as I said, is the liquidity provider. Very simple, single asset stake. Those assets are used to create liquidity throughout DeFi. And for providing those assets, they earn a return. We call that being an LP in a Reactor, which is our initial pools in which folks deposit their assets. The kind of strategic decision-making on where liquidity is created is handled by the liquidity directors in our system. And those are our community of Toka holders. So Toka is our native token. And by depositing Toka into Tokamak, liquidity directors are able to control to where liquidity is deployed. And that includes assets and asset pairings, and exchanges. And there'll be a lot more kind of knobs and levers and assets that ultimately we're expanding into, that we're really excited about, and we can kind of get into that later too. Awesome. The final piece of this is the pricer. There'll be phase 2 of Tokamak, and I think we've got a lot of ways that are really exciting and helpful for protocols and dexes that we can use to create liquidity within our current system, with the LPs and the LDs that are live today.
That's awesome. So you touched on something that the main way that your folks that are going to be LPing with you interact, and that's through the Reactor. Tell me about how the Reactor was invented and what it does.
Yeah, another good question. So our Reactor, which the sort of branding and imagery around was created by Internet Paul, one of our amazingly talented members of the team. At its core function is actually pretty simple. It's a single asset staking pool. But it's sort of the entry point into the system for capital that is a really important piece of the system. So as LPs deposit capital, as I mentioned, they earn rewards for providing that capital in the system. It's a very simple process. And by doing this, they enable us to productively deploy those assets and support the protocol in the reactor that they deposit into. So we have a reactor for all the protocols that we support. In addition, we have a reactor for what we call pair assets, which are quote assets in traditional finance. Think of those like ETH stables as kind of your mental model. We'll take the assets that have been deposited into a protocol's reactor, pair those with something like ETH, and then those get deployed into the markets to support the protocols that have their live reactor. And I think we kind of skipped over this part, but congratulations on your recent win in the core event. Many on the team have been supporters for a long time, and it was awesome to see consistency with our wider community of token holders vote to get you guys in.
Well, you must be reading my agenda because I was just about to get to core and ask about, because, my understanding is that, you guys started with your, what you call that kind of quote pairs as well, and then opened it up to governance and started these cores, of which you've had 3 on. Can you just tell us a little bit, just briefly, about kind of how that core idea got started and how that is evolved to where it's at today and where it's headed?
Yeah, absolutely. The core events are something that has really evolved into something that we on the team look forward to, and I know many in the community look forward to. Just a lot of fun. And the origination of this idea was as we were moving forward into our launch roadmap for Tokamak, there is a natural stage where we had to select the assets that we wanted to launch with. And of course, that's a subset of assets that we wanted to keep relatively constrained as we kind of built out the system and ensure everything works the way we want it to. And as we were having discussions about which assets would be the right fit for us to go to market with, we just kind of, the question arose, why are we the ones that are making this decision? This does seem to be a way, the perfect kind of opportunity, even if we're very early, to open up to our community. And so what the core event is, and it's an acronym for Collateralization of Reactors event, is a week-long event in which the community of token holders votes to any reactor that they would like us to launch with. And it's been really fun to see who the community selects. We always have had a broad range of types of protocols that they were able to vote to. And the voting over the course of the week had the leader, what we call our leaderboard, kind of shift down who was in, who was out. And right up into the last minute, there's a bunch of activity and people shifting around. And at the very end, we have 5 reactors in which which are, quote, the winners. It's simple who received the most votes. And then we move forward with the governance process with each of those communities to stand up the reactor.
Awesome. Hey, it looks like we have Carson joining us as well. Hey, Carson, how you doing?
Yes, doing well. Hey, everyone. Sorry I'm late. I was telling the team Murphy's Law hit today. We've got a leaking problem at our place, and currently have been out with those groups. And I think they may call me in about 15, but I will join for as much as I can here. Sorry for being in and out.
Yeah, absolutely no worries. We're happy to have you. So, that's fantastic. So something that I was reading about in one of your latest updates is, planned in the future for core was an element of permissionlessness. Am I correct in that? And tell me a little bit more about that, if so.
Absolutely.
Yeah, I can chime
Carson,
in.
let's
Happy
get your voice
to
on
at
the
least
mic.
hit the ones that I can here before I get pulled back out for this house stuff. So on the permissionless side, so Craig just gave a good overview, I think, of core, which was always going to be sort of the first way that we got Reactor spin up, or really liquidity spin up, started. Going forward, our plan is to move to what we, for a while, have been calling permissionless spin up. We're probably going to call it something slightly different, maybe decentralized spin up, because what it's going to enable is non-event based liquidity or reactor spin up. So groups could now think a little bit analogous to like establishing a liquidity pool on SushiSwap or Uniswap, where people can drop a token hash in or the 2 token hashes in, establish a pool in a decentralized fashion. It will be somewhat analogous to that, with the exception that you still will need a certain amount of toka staked to the pool in order to turn it on. And that's basically how we can ensure that that the liquidity is not some project just looking to rug, or that sort of a bad actor. And there's various ways that are probably beyond the scope of the time we have here, but that's sort of why we're starting to call it decentralized spin up. So our goal is to get there quite quickly. We may still do a core 4 event, because I think the cores are sort of generally enjoyed by the community, and we have a little bit more build up before we're ready to turn on the decentralized or permissionless reactor spin up, but that's where we want to get fairly quickly.
Awesome. So, something that plays a little bit into both cores and how your reactors operate is liquidity incentives. And so something that I've seen, with your cores and across different protocols, is a pseudo kind of bribe market, where I believe you guys use hidden hand, or if you have some elements like Vodium for convex or things like that. Where do you see that portion of the market headed?
Very good question. I think this is probably not just for Tokamak, but for broader DeFi. I think the power of governance, or the inherent value of governance, which many have branded then as bribes, which while I laugh and enjoy that name, may in some ways be an unfortunate naming, but it's really just the inherent value that your governance has. I would say there's 3 different a general way that this has been used out in the community, and 2 or 3 ways that this is being implemented within Tokamak. So within, I think many of you probably have sort of seen how the bribing mechanism works a la convex. We had something called Tokamak, which was sort of the equivalent of Vodium for Tokamak, and this was predominantly used for our core event, or thus far was used for our core event. So it was groups using that governance power in order to sort of bribe those that have governance in order to attract attention, votes, and therefore to a project, and therefore establish a reactor. Their governance within Tokamak is a much more sort of fluid, real-time endeavor as well. For any of you that aren't familiar with this, in Tokamak, in real time or in cycle basis, week to week, you can use your toka to direct liquidity. So once the Rook reactor is established, you can come in and say, hey, I want to see if you have 10% of the toka that's staked to the Rook reactor, you would get to direct 10% of the Rook and ETH liquidity paired into Rook ETH liquidity across DeFi. So you could direct it to SushiSwap, Uniswap, Curve, etc. And the kind of evolution of the bribing markets, I think, here will go to that more real-time governance, where right now they're very much sort of event or discrete vote based. So that's something I know with the Hidden Hand team we've been discussing is how could they start enabling this for sort of a real-time continuous market for bribes or to incentivize votes within Tokamak, and that's, I think, where this will be going. So you're starting to see like various stacks of payment for governance that are being built up on top of Tokamak and other protocols. And my sort of take on it is it's something that in a decentralized or permissionless market you can't prevent. So you might as well enable it to flourish, and then just make sure you sort of do what you can around it to make sure that the incentives aren't misaligned with what you're trying to do within the protocol. So in the case of Tokamak, it meant us having a very open line of communication with the Hidden Hand team, understand what they're implementing and how, and then make sure that our internal incentives sort of stack with what they're trying to do, and that they're not doing something at odds with what we're trying to accomplish. And we've been very successful thus far in making sure that's the case.
That's awesome. All right, so I've got a little bit of a loaded big picture question for you, and I'm stealing a little bit from one of our community members' questions. But what are you guys doing to, say, position yourselves in the market that separates you from others, or kind of on the flip side of that, what are some big roadblocks that you need to overcome to really achieve the success that you're aiming for?
Yeah, great question. So I think one of the sort of positioning and how we think about liquidity and market making that I think differentiates us, and then I'll get more tactical here, is we think of liquidity and market making here as a layer of the internet, not as like something to be run by a prop trading firm or market making firm. So we think of Tokamak very much as like the liquidity bandwidth of DeFi and really of Web3. Our goal is to, um, over time, enable um, enough reduction in enough friction reduction in providing and directing and utilizing liquidity that we can what's the right way to term that we can basically unlock valueless transfer. So what I mean by that is slippage should become a thing of the past over time once there's enough liquidity bandwidth in a Web3 token-based economy for all of these things to flow freely and trade one into the other. So that I think is just a shift in mindset of kind of where we're playing to, versus most groups that think about liquidity either are building some sort of a novel liquidity um, approach on top of an exchange. We don't want to be an exchange. We don't want to be limited to one exchange. So we're taking this much more holistic approach, and other groups are doing it, trying to own sort of the prop trading stack. So over time, we're actually going to incorporate a lot of trading and market making firms as what we call pricers in the system, which is the last component that we're going to be adding in the future. And I won't go into a ton of detail on that here, but it's really, we're just thinking about how do we disaggregate these things and be a protocol that is agnostic to all of these different moving parts, as opposed to just kind of trying to monopolize or own this thing as a trading firm. I think in terms of how getting a little more tactical, right? That's very like maybe abstract, visionary kind of stuff. Getting more tactical, I think DeFi and Tokemak included is going through obviously a lot of growing pains right now, but really those are market focused. But I think product market fit is undergoing somewhat of a sea change at the moment as well. So in the past, it was very much, you can think of it like this: financial infrastructure in the past was built out necessity of real life companies and businesses that now needed to access lending markets and credit markets and all of these different things. So it always came from a business need first. Here it's happening in reverse. So DeFi started building itself, and it needed to be there in order to then enable more Web3 business models. So effectively, it's being built in reverse. What that means is the very first era of DeFi that I think we just sort of saw the book closed on was DeFi protocols built and then immediately looking in for users, and that's where retail stepped in, and that's why DeFi thus far has been predominantly retail driven. It was financial and technologically minded people that stepped in to do the role of other protocols because the other protocols didn't exist yet. The next phase of this is going to get broader adoption of things like Tokamak, things like Keeper, things like all of these different really interesting primitives that are out there. Is going to be more protocols in the adjacency around DeFi, but then importantly, a retail movement that's predominantly Web3 and product based, as opposed to financially and technologically minded people, which has been the small slice of retail that's been focused in DeFi thus far. And I think large institutions with a lot of capital, we need to get them to flow capital into DeFi in a bigger way. There's obviously been institutional adoption of Bitcoin. We need more sort of adoption of DeFi, even though I think DeFi can disintermediate those things so that in the future you don't need those. I think we have one generation worth where we actually need to have that capital sort of flowing into DeFi so we can eventually disintermediate those participants. I'll pause there and see if anyone on the team has more. I'm always thinking out like quite a ways out, so all of that might have sounded out there compared to the actual question that you teed up. Anyone on our team have more like close to today thoughts on the question?
I think all that sounds great, and totally aligned. That there are some things that I think that are near term. I think one of the things that does continue to differentiate Tokamak is this. Carson used the kind of term real time, which I think is really powerful for all of the participants in our system. We are able to direct liquidity to where it is the most useful, the most effective, to where it can achieve whatever the goals are of our token holders. And I think that's really powerful. We are a meta layer that sits on top of X's or wherever liquidity can flow into. And that gives us a tremendous amount of, that gives the participants in our system a tremendous amount of kind of flexibility and influence over liquidity itself, that enabled us to use a lot of the new innovations. I'm not sure if there was some specific kind of competitive things that you might have had in mind, but really this is I see almost everything that is being built in this space is symbiotic with our ultimate mission to kind of aggregate assets and deploy them to where they can be helpful.
Awesome. Something that it makes me think about is, around liquidity, there's been some interesting new, what I would call innovations around it. Your reactor is definitely, what I would consider one of the most unique and interesting things that I've seen. You have folks incentivizing through if you look at the Olympus model for Olympus Pro and growing protocol owned liquidity, kind of thinking about that kind of stuff, and what I read from your one of your latest Medium articles about your ACC tokens. Can you tell me about those assets and kind of where that might change things?
Yeah, I'll start sort of high level again. So and then drill down into this. So I think something again with sort of the moment that we have in the maturation of DeFi is that things are flowing over from everyone being hyper TVL focused, which TVL or total value locked is sort of a how much debt can you finance if you think about it. So it was an important first step where groups were very much focused on how much basically liquidity can just be sitting in a contract. But moving forward, I think groups care a lot more about what's commonly called PCV. Internally, we sometimes call it PCA or POA for protocol owned assets, because these are things that the protocol owns free and clear and can evaporate. I think many of us have seen liquidity in the form of TVL move away as people go sort of risk off in the current market, or anytime incentives change. So what we're really trying to accomplish with this ACC Toka model is rapid growth of our protocol owned assets. So a group that's done this very successfully is Convex. So if you look at what Convex did, they basically built a better mousetrap by pulling apart governance power from sort of revenue generating power within the Curve ecosystem. And Bruno can keep me honest here, but I forget, I think it's like 40% or more of the CRV is owned by Convex. I'm sure I have that number wrong, but it's some crazy amount. And they've basically done that just by having a better mousetrap and minting, you could say, sort of a worthless new token every time a CRV comes in. So they mint CVX CRV and hand it out. It's not perfectly analogous to what we're doing with ACC, but the sort of concept is there in that if you can offer a better mousetrap where there is liquidity as a utility, plus some interesting revenue leverage mechanics that only a group sort of doing this at scale like Tokamak can offer, you can start growing the protocol owned assets very rapidly. So the best way to maybe summarize, because if you look at our ACC Toka article, you really have to sort of sift through it. It's very mathematical. The summary for those that aren't mathematically minded is it's going to enable locking of Toka, which will be helpful in sort of reducing supply or taking float off the market. Second, it's going to enable an interesting, almost dividend-like mechanic, which we think will be quite important. And then third, over time, we're going to actually be able to take a piece of our profitable revenue, distribute that in the form of more ACC Toka, which is essentially locked tokens. So we believe this will be an important step sort of as protocols move beyond the inflationary phase, that was the last phase of DeFi, and start to think about how they can generate value in a sustainable or eventually sustainable fashion rather than sort of the way most of DeFi has been growing over the last 2 years.
Awesome. So let me circle back to your current stable of reactors, and especially the token reactors that you have. From your core participants, do you have examples of optimized strategies you've seen folks either deploy or modify to improve? As obviously our protocol is and now in that same boat, lessons learned can be so valuable. So I'd love to hear any insight you guys have about folks that either have learned and improved, or have deployed a strategy that you would happily champion.
Yeah, I think, and just to make sure I sort of get the gist of the question, is it most thinking strategies while using Tokamak by projects, or more general liquidity strategies sort of across the space on how to deal with inflation and liquidity, or both?
Well, if you want to just come work for us and tell us exactly everything we need to do across every protocol, I'd be great.
Yeah,
Just tell me about how folks can use the Reactor to get the maximum impact.
Sure. So I think in general, having a group of liquidity directors, which again, we're throwing out a lot of jargon on you on this call for this call. So feel free to, anyone that's interested in this, pop over to Tokamak's Medium if you want to read more of this. A lot of the early articles will get you up to speed. Liquidity directors are just stakers of our native token Toka that can then direct the liquidity. So if it's a Reactor ABC, or in this case Rook, you want to have engaged participants that act as liquidity directors to give us the signal on where the liquidity should be deployed. Our thesis is that the protocol and the protocol's community are the ones, meaning in this case Rook, not Tokamak, are the ones that know best where to deploy the liquidity. So whether there's other protocols that are leaning on SushiSwap for some reason and how they're operating, or whether there's something in Curve V2 that you want to capture, or sort of where the users of liquidity, which are not only traders, investors, but other protocols, other Web3 participants, need to access the liquidity. So our biggest sort of takeaway was disaggregate that director into a consortium of directors, which are the protocol and their community, and then really just set up the incentives around that in the right way, so that liquidity providers and liquidity directors are incentivized. And so that sort of would be my main takeaway, is make sure that within anyone in the community that's on this call, and then importantly within the protocol, as you amass Toka, which you'll earn as you provide liquidity, use that Toka then to route wherever you think that liquidity is most helpful to you. And there isn't really one size fits all, I would say, to this. We see some groups that want 100% of their liquidity on SushiSwap, and that's fine. And there's other groups that want their liquidity split between two venues. I wouldn't say there's a right answer. I would say you don't want to spread it so thin that you have large slippage or large volatility and limited liquidity on 4 venues, something like that. Craig, you probably have some thoughts, Craig, or anyone on our side, thoughts on what strategies you've seen successful here. Oh, one other that I'll throw out, and then I'll let Tim go. And I think I'm getting called back here, so I may have to drop in a minute. But one other interesting strategy is merging pool 1 and pool 2. So instead of just having ABC staking pool and an ABC ETH Sushi or Uni LP staking pool, through Tokamak you can actually merge those into one. So when you stake into Tokamak, you get back a T asset, so in this case TABC, and because those underlying assets are deployed by Tokamak across the ecosystem, you get liquidity in a pool 1 style. So a number of groups have either replaced or explored replacing their 2 pools with a single pool that they can pay 1 bucket of inflation to, or emissions, instead of 2, and still get all the benefits of a pool 2, while making the experience very simple for their users, where they just have to stake the single token and not bring the ETH to the table. Craig, or anyone on our side, any other sort of learnings or best practices we've seen from strategies from projects?
I think that was a pretty good summary. We do see, as Carson mentioned, we do see folks have a preference for one venue versus another venue. And so to the extent that you have relationships or some philosophical alignment, kind of aggregating in one spot definitely can make sense. Splitting can make sense depending on if you just want some sort of presence in multiple places, again, without being spread too thin. I think the strategies right now are pretty straightforward. Where it will start to get more interesting is soon, as we turn on more venues that offer kind of different trade-offs in how that liquidity is deployed. That's just a little bit of a sneak preview. Can't tell you too much about it, but in addition to different assets that can be paired against a token. There will also be different new venues with new kind of levers that are being turned to establish liquidity that is almost unique to whatever the current liquidity profile of a project looks like, where we can kind of support them through the growth of and maturation of their liquidity throughout the space, all of which I'm really excited about, and I think will be really helpful for the space.
Awesome. All right, let me see here. Why don't I go on ahead and pause? And I've got a few more questions, but we've got some folks in the audience here. Does anyone want to hop up on stage and ask a question for these guys while we've got them? I can always continue my barrage. But Starfire, I'm going to call you up here.
Thanks, Deets. Can you guys hear me all right?
Yes, we can.
Yep.
Perfect. This is sort of just kind of like a general question regarding liquidity, but if you guys were trying to determine like a certain amount of liquidity that you want on an asset, is there sort of like a sweet spot in terms of the amount of utility you can get out of the amount of liquidity, or is it kind of just based on like the assets, like how mature the asset is and where it is in its market cycle? Is there any kind of I don't know, optimal level that you guys would recommend?
Yeah, very good question. The weirdest thing maybe about liquidity and market making is like as much as it's very much scientific, it's also like an art. But I will say there's like general guidelines to this in that it depends how big tranches of buys and sells is probably one of the biggest. How big and how frequently natural holders of the token need to interact with it. So depending on the protocol, right, it might be a liquidator that needs to acquire or sell the token or whatever. You want to see, okay, is it usually $100 clips other than just speculators that need to go through this, or is it like people need to buy $50,000 at a time? Because that will determine, if it's usually larger clips, then you need more liquidity, deeper liquidity to be able to absorb the moves without causing a crazy amount of undue volatility or prices, especially to the downside for the token. If it's smaller clips, like and early on in the project, there can sometimes be an argument for less liquidity because, especially in the last cycle when things were in a bull market and you launch a token and it generally goes up, if you have less liquidity, it means that the possibility of it mooning is higher. If you know that you have sort of a natural floor for some reason to the token, which can happen for various reasons. And then later, once it gets more mature, then you'd want to like establish more liquidity. This is strictly from a sort of gaming or optimizing like price mechanics sort of to the token. But again, I would say the biggest thing is the natural holders or users of the token, which can be other protocols, making sure that protocols and users really in this space more than traders and investors, making sure that you have liquidity to support the size that they interact with the token.
That makes sense. And I've always kind of viewed liquidity as like double-edged sword. Like if you have too much liquidity, it obviously takes more to move it up. But if you have too less, or if you don't have a lot of liquidity on the way down, it's just an elevator. So
yep, definitely right.
Thank you.
Thanks, Starfire. Looks like we got Breeze hopping up here. Breeze, you want to go ahead and unmute and ask your question?
Yeah, for sure. Hey guys, I just have a quick question in regards to Tokemak reactors. How difficult would it be to implement like a WBTC or a RenBTC pool? And would they have to be voted on by liquidity directors and go through the core process?
Yeah, that's a very good question. The short answer is it's definitely one that we've been discussing internally, and generally anything that is a governance token or project token, we've been saying that has to either go through up to this point core or eventually this decentralized reactor spin up. WBTC or RenBTC, you can make the case that this is, or I shouldn't even say make the case, it can be used as a basically quote currency, so something you pair up with the base tokens, so Rook and ALCX and all those kind of things. And so we've talked internally, that's one where we can probably push through, which with much more limited governance, just put it up to a community vote or something to turn one of those on. And it is something like if that's something that would be interesting to you, we've been fielding requests for that, and I think that could be an interesting thing for us to add. I think more liquidity paired against WBTC or Run BTC or whatever in the space could be really interesting.
For sure. Thank you.
Thanks, Breeze. It looks like we have a question here in the voice chat asking about a Toka DAO. So maybe if you want to just quickly talk about governance, and then if that is something that you could also expand on.
Yeah, so we actually have our first governance vote. So we have sort of, we called it operational governance live since day one, which was where should the liquidity go? We don't want to determine where it is. We want the community to determine where it is. We just recently added sort of snapshots. So we have our first snapshot vote on right now, which is to establish the Tokamak Foundation. So you're going to see a lot more in sort of traditional governance at the DAO level, starting really yesterday, I guess, in Tokamak, and you'll be seeing a lot more of that as we continue to push towards more and more decentralization. So I would say there's 3 levels of governance to Tokamak. One is the liquidity direction, so determining where operationally liquidity should be deposited and really flowed across the ecosystem. Second are the core events to determine which project should be on Tokamak in the first place. And that will be replaced with decentralized Reactor spin-up, but still where it will use Toka governance to do so. And then the third thing is the snapshot vote for more sort of, let's call it strategic or initiative governance. Those are kind of the 3 levels that we're using. And it looks like I just got pulled where I have to jump back out. I will try to join the call if one is still on, but you're in good hands with the rest of the team here. And thank you for having me on. Sorry that I've been on and off on this call.
No worries, Craig. Sorry, Carson. We're happy to have you here. I appreciate it.
Yeah, of course. Good to chat with you, and we're always happy to schedule other ones and go deeper on anything. Good to be talking to you all. So.
Of course. So something I did want to follow up on there was, did he mention that you guys have a foundation? Is that what I heard correctly? Can you maybe talk a little bit about what went into the decision to create that?
Yeah, I can start on that, and anybody else on our team can jump on. It's definitely led by council, so lots of caveats about me not being an appropriate person to take legal advice from, or even probably the expert to walk us through this apply here. So I think as we've seen after quite a bit of discussion and analysis of how other DAOs have approached their kind of broader community structure, it became relatively clear that there are pieces of a protocol which will operate better if there is some kind of recognized entity able to kind of represent. And those in particular are things around IP and sort of management of the treasury. And this is very analogous to the approach Maker took in setting up the Maker Foundation that kind of supports the protocol. As you know, with Maker, the foundation was ultimately wound down after a period of time in which the protocol kind of was truly take over and fulfilled all of the requirements that a protocol would need to do to manage these pieces. And I think that's the ultimate goal too with the Tokamak Foundation, is that at the appropriate time that will be able to be dissolved and kind of handed back over in a nice transition to the community.
That's awesome. All right, well, let me pause again. Are there any other community questions that folks have for this crew? Hey, Troy.
Hey guys. Hey, Craig. Hey, everyone. Yeah,
Hello.
my question was surrounding the single-sided staking permanent loss. I've seen a lot of comparisons between Tokemak and Bancor, who's one of our first partners earlier. recently they had to kind of turn off their IL protection due to some market conditions. Has that kind of impacted any designs that you guys have for your platform, or are there any, I guess, similar concerns that we should be on the lookout here with Token?
Yeah, that's a great question. So I think one level setting piece here is I'm familiar at a high level with Bancor and their IL protection, but I'm definitely not the expert to comment on their system. I do, from what I understand, the mechanisms with which their IL protection used in their design are quite different from Tokamak's mechanisms. And I think as we look at this very, very disruptive time in the markets, we've been pretty happy with how well we sort of the system has remained stable in the way that was kind of expected based on our designs and the intended behaviors. One of the things that's really important about Tokamak is that the way our backstops are set up, and we have a few different layers, we are not leaving capital in the markets that and so if there was kind of a bank run at this moment, we would be able to repay effectively the depositors who act as LPs in our reactors. And that's one of the core tenets of our design. We have additional fallback mechanisms that are in place in case we need to draw on them. But we have designed the system, and today we've scaled it in such a way that we're very conservative with how we deploy assets that are effectively lent to us by our users.
Awesome, great answer. Thank you. Yeah, well, wow, time's flying along. I love chatting with you guys. It's unfortunate that Carson left. I was going to praise him for his talk that I got to sit in on at Permissionless, and I know sadly that I underdelivered on bringing a bottle of wine for CJ. I'm going to blame that on the airport. But what do you guys have planned in stock for kind of getting in front of new audiences and stuff? Any other conferences you'll be attending or other opportunities?
Yeah, of course. We are out in the communities as much as we can be. We learn and love to engage for our own personal benefits. I think if I can somewhat speak for the team here, as much as trying to get it out there for the purposes of Tokamak. I believe that I can confirm all three of us on stage right now will be in Paris for ETHCC in about a month. And if anybody is out there, would love to say hello, definitely let us know. And then I think beyond that, we're probably still figuring things out, but certainly intend to be where we can be.
Well, cool. I'm going to throw one last softball at you guys before we wrap this up. What bit of information do you want to impart onto our community here that maybe we didn't cover today, or just remind us about some exciting stuff down the line for you guys?
Yeah, that's a good one. I think a reminder to us all in this space, given where all of the sort of turmoil that we've seen, not only in crypto, but more broadly, is that this is build season. This is where real builders get to have fun. And we have a ton on our plate that I think kind of completes a lot of the pieces of the system as we continue to expand our vision of all the things that it can be. So I hope everybody's paying attention, keeping good spirits as personal portfolios might be moving around, and realizing that this is all a build for the long term, and we're in a great position at Tokamak to be a part of infrastructure that is put in place that enables this whole space to continue to grow over time.
Awesome. Bruno, CJ, any last thoughts from you guys?
No, I was actually going to. Craig stole my my speech, but like,
I retract.
yeah, I was just going to say, like, I think it's actually interesting that what Craig said, because, and I think you will certainly agree to that, is that the while there's like, you know, this turmoil in the market is like, I mean, it's, you know, it's upsetting ultimately to everyone, also like teams and protocols, but that it's important to understand, like, for the broader community, that like oftentimes on the other side, kind of like in the builder community, the mood is not as terrible, right? It's truly like, now it's building season. Nothing's like really slowing down. If anything, actually communications between teams, like, you know, increase. And yeah, and I think, you know, we'll have to like weather the storm, and yeah, I think great things to come. It's not the first time this happens. Although certainly like the macro environment is this time is a little different.
Awesome. Well, we can go on ahead and just you know, call it a wrap there. I just, you know, three of you, I can't thank you enough for coming on over to our little shop over here and sharing your thoughts with us. You know, we're excited to you know, really be kicking this partnership off. I know that you guys had mentioned you know, igniting reactors is on the way, and as you know, we develop our strategy and are in contact with you guys. You know, you guys have been absolutely fantastic to work with. And so, you know, for me, you know, I hope that we get to maybe bring you back on again in a few months and talk about the success of what we've done together. But again, just a big thank you all for joining us today.
Awesome. Thank you for inviting us over. It's always a pleasure.
Been a pleasure, Kyle. I'm excited we got to do this, and I'm excited for everything that's yet to come.
Awesome. Well, CJ, Bruno, Craig, and, you know, I guess if he comes back for the recording,
relay the message.
Well, thank you guys so much. We'll just wrap up with a little bit of housekeeping today. For folks that had been watching our snapshot, I believe that our latest KIP passed unanimously. Check out our announcements channel if you haven't seen that. We have been having some interesting conversations in Treasury Tuesday and in the governance workshops as well. Those recordings are up on YouTube, as will be the recording for this later today. And then just one last item, which is Town Hall tomorrow, 3 p.m. But outside of that, just another huge shout out to the Tokamak team for everybody that showed up today and had some questions. Thank you. And we'll go on ahead and adjourn today. And thanks, everybody. If we don't see you tomorrow, have a great weekend. And yeah, thanks again.
Thanks, Kyle.
Thanks, Kyle.
Of course. See you, everybody.